Good afternoon, good evening, everyone, wherever you are checking in. Thanks for watching S.M.E Talks podcast. I'm your host, Jay Waddell, and today I have a guest that I'm super excited to have on today. This is a gentleman that I have the pleasure to call a friend. He's assisted me with, networking, with getting to know different people around the Tampa area, and now we have him here. So this podcast, we want to cater to individuals that are either looking to get inside of the real estate industry, whether you're looking to buy a home, whether you're looking to become a realtor or become a lender, whatever it is that you are trying to figure out. We hope that these experts, these individuals, with the resources can help you, can provide you that that next step into whatever it is that you're looking to do. So without further ado, I got a good friend of mine, Doug Smith, in the building. What's going on, my friend?
Hey, what's up, buddy? Thank you so much for having me on here. Looking forward to it.
Of course, man. I appreciate it. I thanks for your time. I know we took a little bit to put this thing together, but timing is everything. So I'm excited, man.
Yeah, let's
So
do it.
for everyone that doesn't know Douglas Smith, tell us a little bit about yourself. Where you're from, and what you do now.
Yeah, cool. So I'm from here, which I hear is like getting rarer and rarer. I'm actually from Pasco County, so the next county north of Hillsborough. Um, from here, I do residential home loans. So I'm a loan officer that does lending for if you were to buy a house or if you know, and if you're buying a home to live in, or you're buying it as a second home, maybe you're in a different state, moving down here, you need a loan. And if it's 1 to 4 units, if it's a condo, a manufactured home, if you're buying an investment property to rent out on Airbnb or something like that, that's the type of loans that I offer.
Nice, nice. So how did you get it? How did you get started in doing this?
Um, Luck, God's blessing. No, I just wanted to be in business. So an opportunity opened up to be a receptionist at a mortgage company. This is when I was like 20
Mm,
years old, and I took
yeah.
it. And
Wait, you're not 20?
just what's up?
You're not 20?
Now I'm a little older than 20 now.
No, no, no.
I took it and ran with it, and then just stuck with it. I realized what an opportunity it was, and yeah, worked my way up through the company, started as a receptionist and became an assistant and became a marketing assistant, and then got to kind of learn the whole business and travel all over and see different operations. So it was super cool.
Nice, nice. So you actually didn't just become what you are now, a lender, right? You started from the front desk, if you will, the front house, understanding how the industry works, listening to uh, the lenders at that office, how they did processes. So was there a course or school that you had to go to, some type of course that you had to go through in order to become a lender now?
Yeah, to become a loan officer, you have to take a 20-hour course and then take a federal test and then a state test. I did it in one weekend. I did the
Whoa.
class on like Friday night, Saturday, and then Sunday. And then I took the test on like a Tuesday and I was a loan officer. But that's how you can get your loan officer license. But for me to become a true loan officer, to become like a master at my craft, it took a long time. Like
Sure.
I was on a team for 4 or 5 years, and then I've been a loan officer for probably about 5 years, creating my own business for that. And then in the broker world specifically for about 4 years now.
Nice, nice. So one thing that I want to question on. So you mentioned teams. So as a realtor, right, when you join a brokerage, you have a team, kind of split commissions and whatnot. Does that apply the same type of concept to lenders,
No,
to
it's a
loan
little bit
officers?
different.
Yeah.
So On our side, it depends. If you're like a branch manager and then you have loan officers underneath you, it's a similar structure. But when
Mm-hmm.
you're a loan officer and then you have your team beneath you, it's basically like loan partners, loan assistants, and um, they're typically salaried or salaried plus a bonus. They're not necessarily a full commission loan officer.
Gotcha, gotcha. Okay, so that's not okay. You don't split any type of commissions. It's like you still go out and get your own clients type of thing.
Yeah. Well, like, so for me, like I own my own brokerage, right? So
Right.
I'll have
We'll
like
talk
my
about
own
that. Yeah.
production, my own loans, and then I'm creating a team. I don't know if you saw, but I just created a new video. We're looking to recruit a loan partner, that position that you're talking about.
Very nice.
And then, but if there's a loan officer, right, that wants to go um, and get their own business and originate their own loans, they can hang their license at at my company, right, and then do
Nice.
it that way. So it's kind of similar to the real estate side, but I think when real estate agents build teams, pretty much everyone is kind of commission based, and
Yeah.
unless you're like
Yeah.
a transaction coordinator, you know what I
Mm-hmm.
mean?
Right. 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 So, what made you want to decide, or yeah, what made you decide? You know what? I'm going to do this on my own. I'm going to start my own business. At what point? You know, because you say you've been doing it now 4 years as a loan officer, right? So, at what point did you decide? You know what? I'm going to venture off. I can do this on my own. I got this.
I started doing loans. I had, kind of had like a team structure, but then I really started working on every loan myself personally, walking the client from A to Z, and then figuring out how I wanted that journey to be for them. And then realizing that I wanted to kind of grow and expand that with my own creative freedom. You know what I mean? With
Mhm.
how do I want Smith Lending to look? How do I want it to feel? How do I want the brand to be? Really wanted to create my own brand and kind of branch out that way.
Nice, nice. So what is that experience? Because you said you wanted to tailor or curate, if you will, that experience for your client. Does that experience look different from loan officer to loan officer, or is there a somewhat of a template that every the industry follows, every loan officer follows, to say, we're going to take you from point A to point Z, through the transaction.
There's definitely a typical model, right? Like every loan is essentially the same, although every loan is very unique because there's always different scenarios and different situations and everyone's different. The loan process from we're under contract to we're at the closing table, that's kind of a finite process, right? Now,
Right.
how you get from point A to point B, you know, do you believe that everybody should be on a charter bus moving on the same thing? Do you believe some people need to be in a Ferrari and this person needs to be in a Bentley and this person likes the lifted Jeeps? We got to, you know what I'm saying? So for me, and then so I kind of go against the grain of the industry
Gotcha.
because a lot of loan officers or a lot of lending companies, like Rocket Mortgage, right, or like Quicken,
Talk
or
about
like
it.
big
Talk about it.
companies, they want to make this streamlined process where
Yeah.
you put someone, you strap them into the roller coaster, and it's like, thumbs up, send that sucker on, right? And it's
Yep.
like you're gonna hit, every single point, and it's gonna like hit this roller coaster. For me, um, I don't really like that model. Like, I don't knock it because obviously it works.
It
Like,
works. Yeah.
there's huge lending companies, like, pretty much every lending company is structured like this.
Yep.
But for me personally, I run a referral based business that's built on relationships. So it's super important for me to build that relationship throughout the process. And um, I work with each client individually from start to finish. So, and that's what I'm talking about. Feel like with the roller coaster model, if the appraisal comes, like, you hit speed bumps, and a roller coaster ain't going to deal with speed bumps very well. That thing's moving.
Right.
You know what I
And
mean?
they keep. Yeah.
So you might have like an 80% satisfaction rate. Some people are going to like it, some people aren't going to like it. For me, I want everybody to like the process. I want everybody to leave a 5-star review. I want everybody to feel comfortable referring me to the next person. So that's something that I really, really focus on, tailoring, the touch points, the text being available by the phone, just, really making every single client feel like they're special. like they can get a hold of me at any time, that they can feel confident in the transaction. I really, really focus on that client experience.
Yeah. And like for me, that's something that I've learned um, just in any industry. I think we can see that, they have those behemoths in whatever industry, right? Whether we're talking Airbnb, we're talking uh, um, Uber, right? So versus someone that just wants to, rent out their home, right? They may not be so much competition to an Airbnb, or a taxi driver may not be so much competition to Uber. But the difference is, yes, Uber may have the quantity of cars on the road, but they may not have the quality that a small, more uh, niche based small business rental company has, because they cater more to a special diverse type of person, or not diverse, but a specific person, that they're going to make sure they're giving them quality vehicles, the service is on point, and you have that personal interaction with them, versus a Uber. You can't necessarily get that. But I see that that's what I see from what you're saying, in terms of you tailoring your business or your experience with the client, to be more personable, and then that in turn will get the referral, because they enjoyed the experience that they had, that you were able to facilitate, in a sense. That's awesome, man.
That was
So
a good way
you're
of describing it. That was a good way.
yeah, yeah. I mean, that's just what I thought about right now. I was just thinking, I was like, yeah, that's it's sort of somewhat the same thing. Yeah. And so your business, you got started 4 years ago, doing the loan officer side of things. But did you start then and there, the business? Is that when it also started, or were you kind of just trying to figure out, like, all right, I'm going to do this on my own, but I'm not necessarily going to form an LLC to do this?
So I think I started like 5 years ago, and I started with a direct lender, meaning that I was working with a lending company or a lending institution that only offered that company's loans, right? And that's
Hmm.
like a lot of companies are like that, right? Or a lot of loan officers are like that, where they just work for one company. Then probably about
For
four
their
years ago.
lifetime, you mean? Like they'll just work for this company for however X amount of years. Like, is that typical?
I just mean like a lot of loan officers work for direct lenders, meaning like if you're a loan officer that works for um, like Movement Mortgage or Cross
Hmm.
Country Mortgage,
Hmm.
or these like bigger name lenders, then you only do loans for that one lender.
I gotcha.
Like
I gotcha. Yep.
as a broker, I originate the loans. It's very same thing, right? Like I'm a loan officer, right? But I don't work for, like, if we do your loan through Caliber, your loan might be through Caliber, but the next guy's loan might be through um, like Freedom Mortgage, or the next guy's might be through like Flagstar. You know what I mean? So
And how is that determined? How is that determined?
um, a multitude of factors. The deal itself, which lender is going to be the best for that deal. Like as a
Hmm.
buyer, as a consumer, as a client of ours, like I don't sell a client like, hey, we can go with Caliber or with Flagstar, because for them, they're working with me. They're not working with that end investor.
Right.
Like
Right.
I place their loans. I give them, like, I don't even say we're going to go with this one or this one. It's here's where your loan is, based off of where rates are for the day. I typically go, we have a closing date. We got to hit the closing date. Number one,
Hmm.
where can we find the lowest rates, and will this lender fit this bucket? Because some lenders, there's guidelines that every lender has to follow, and then each lender might have their own what they call overlays, so additional rules on top of the federal guidelines, right? So it's where can we get the lowest rates, and will the client fit this lender's taste, essentially, or this investor's taste?
Now, these overlays that you mentioned, are they fees?
No, overlay is just a rule. So like,
Oh, it's just a rule.
let's
Okay.
say for a condominium, you're buying a condo, and one lender might say you're buying an investment condo, so you have to put 30% down, right? So you're thinking,
Have
oh,
to.
okay, so investment condos, I
No,
have
no
to put
way around
30% down. But another lender might only require 20% down because guidelines state that you only have to put 20% down. I had another one recently. Client got denied because they were commissioned, but they were commissioned for only 1 year,
it.
right? And I didn't deny them. Sorry, a different lender was denying them, right? But they came
Right.
to me looking for help. And so we determined that we had a lender that would approve them based off of 1 year's commission. They didn't have to have that 2 years that this other lender was saying. This other lender's
Gotcha.
overlay was they needed to be in commission for 2 years to qualify that income. So an overlay is just an
Mm,
additional rule that that specific lender has.
gotcha. Gotcha. And so what would you say? Okay, so let's say I'm bringing you a referral, right? An individual, they're looking to purchase a home. Walk us through the steps. Um, if that person comes to you, this is, I want to purchase a home. I don't know, I don't understand the process, but Jay referred me to you. What do I do? What's the first step?
Super simple. So either phone call, or you can go right on my website and start putting your information right away. Either way, if it's the initial phone call, we're figuring out where you want to be monthly payment wise and where you want to be cash out of pocket wise. And if there's like a specific price range that you're looking in, have an idea on your credit score, income. We're basically trying to see within 5 minutes determining where you're wanting to be and if we can get there.
Mhm.
Okay. And, as long as your credit score is high enough to qualify, you've got the income and the money for the down payment, or if it's VA, you got enough money for the closing costs or whatever you have you. Then what I do is I send that link. So you can start with the link right away. I prefer a quick phone call just to say,
Yeah,
hey,
quick call. Yeah,
figure out what's going on, fill out the
pleasantries.
information in the link, and then send in your documents. So once I get the information on income, I can pull your credit, I can look at the assets. Then that's when I can determine here's what you're actually pre-approved for. Here's your pre-approval letter. You're pre-approved to 500,000. Okay.
And this is before they know who the lender is.
Yeah, I pre-approve them.
Oh,
Like,
you pre-approved it. Yep.
yeah, there's no specific lender at this point, right? We're not locking into a rate at this point. We're not
Right,
under
right,
contract on this point. So at this point, we've just determined that you can get a loan based off of federal lending guidelines.
right. And now, so what are these factors that will approve or deny someone?
Credit, income, and assets.
Okay.
And then, like miscellaneous things like if there's child support or if there's been a bankruptcy,
Hmm.
things like that.
Okay. So there's three that you mentioned: credit, income, and assets. Walk us through the credit portion. What 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 do you typically see now, right, in this year or within the time that you've been doing this? What do you see as a factor of like, I know they're not going to get approved, or this is the number. Is it based on a number, or is it based on reporting information that's on there?
Yeah. So right, like on the first phone call, right? I'll ask what's your credit score. If it's a 500, not going to be able to do that loan. Every lender is a little bit different with their credit scores, right? The overlays versus the guidelines.
Hmm.
So some lenders will go lower for FHA or VA, but general rule of thumb, right, for the most part, is you need at least a 580 credit score to qualify for like FHA or VA. And then for conventional, you need at least a 620. But conventional, it really as long as they're like a 580, we can work with that.
Yeah. So all my veterans, take heed to that. 580 and up. Got to work to get in there. Okay. So we have credit. We have, what's the second one?
Income.
Income. Okay, so income is based off of uh I mean, what's a typical, average income that someone can qualify, or is it all encompassing? Is it all three together, or can one be better off than the other one? Can they have two of them good and then one is not so great, like the credit is so great, but they have the income and they have the assets, right? So does it work that way, or is it each individual section? Do
Each
they have their
individual bucket. So you need at least a 580 score. You could have $3 million in the bank, but if you have a 450 credit score, you're not going to get a loan. You know
Yeah,
what I
just
mean?
buy cash. You have cash.
Right. Or you
Okay.
can make $1 million a year, but not have any money in the bank, so you don't have any down payment. Maybe you're not a veteran, right? So now you can't get a loan. You
No,
know
you
what I
can't get
mean?
a loan. Okay. So veterans, without a doubt, there is no way around that. I want to be clear. There is no way around if you have 580 below that you can get approved for the VA loan.
Yeah, some lenders might go below 580. I just don't know of any.
Okay, so if they get approved, what is that rate looking like?
At a 580?
Oh, below 580.
No. So with interest rates, you have to understand too, like quoting a rate, it's only from today. So like interest rates,
Gotcha.
December 31st, before we went into this new year, the rates were in like the mid twos for VA.
Yep.
Now the rates are in like the mid fours. You know what I
Right.
mean? And if you have a low credit score, you're probably looking at it like if like the bare minimum credit score, you're probably looking at like a 5.5% interest rate, like a percent higher than what the average rate would
Then with
be
the
or a
average,
good rate
yeah.
would be. You know what I mean?
Yeah. Yeah. So, okay, someone gets approved. Let's just walk through they get approved process. Or actually, you know what? We'll do the denial process because that's the shorter one. So they get denied, right? They apply, they get denied. What happens there? Do they get notified then and there after the application, or is it we're gonna let you know in the mail, why
No,
we couldn't?
typically on that phone call, right? So we're having that phone call, and on the phone call, I can pretty much determine on that phone call if they're going to get approved or not, or if we might have a gray area here. You see what I'm saying?
Gotcha.
And so when they send me their information, what I do is I look at it, and let's say their credit score isn't high enough to qualify. I'm like, hey, look, you got a 500 credit score, and you got 6 open collections. You can't get approved for the home right now. Here's what you need to do to put yourself in a position to qualify. You know what I mean? So, and it's not like you get some like red stamp, like you're denied, and then it goes out to every lender, and then it goes on your permanent record that you're denied. That's not really how it
That's
works,
how it works. Yeah.
right? Um, you may get an adverse letter, in the mail stating that you don't qualify for a loan now, but it's there's no negative behind it, if that makes sense. Like
Yep.
you need to know where you're at rather than guess about it and go, well, I don't think I'm going to get approved. I'll try again in 6 months. And it's like, well, based off of what? Like, what
Based
are
off
you
of
going to
what?
do?
What are you gonna do?
You know
You're
what I
gonna
mean? Like
magically
you
earn
think you
500K?
might know. You think, well, I need a 600 credit score. My Credit Karma says I'm a 550, so I'm just going to wait. And it's like, and you could, but like, you really should talk to a loan officer, give them all your information, and let them guide you. They're going to know how to
Gotcha.
get you approved.
Gotcha. Yep. There you go. Okay. So perfect. So now they're not approved. You would let them know what the next steps would be or how they can go about in increasing that credit, if that was the determining factor, right? I mean, they may have the income or they may have the assets, but the credit was not there, so they didn't get approved. So you'll let them know this is what we need to work on.
Yeah.
So the next question is, um, who do you pull from? Like you pull the credit, but then is it the three big credit agencies? Is it some other ones? I know there's like Innovis and some other ones out there, but
Experian,
well,
Equifax, and TransUnion.
those are the three. Okay, so we pull from those. All right. And so there's not one over the other. It's not like, okay, we're just gonna pull from Experian. We're gonna pull from all three.
And it's your middle
Gotcha.
score. So it depends whichever ones you have, a 650, a 675, and a 700. It doesn't matter which bureau it's with, one of the three, that middle score, that 675 is going to be your qualifying score.
That's the one. Okay. Golden, golden. So now let's just walk through. Someone does get approved, right? You give them that call. Congratulations. Here's a pre-approval. X amount of dollars. What's next? Like, are they speaking to the realtor? Are they, getting on your website? What are they doing now at this point?
So issue the pre-approval letter, and I CC their real estate agent on there, so the real estate agent has a copy of that letter. And at that point, it's they're off to the races to go find a house, make offers on the houses. I like to be involved in that process. If they see a house they like, I can run the numbers for them real quick. And if they make an offer, I like to call that listing agent right away, just to talk about help get that offer accepted. and make sure everything goes super smooth.
Nice. So let's say, and this is just for people that have never gone through the process, because I'm sure there's a lot of people. So before I actually ask that question, are there more homeowners in the U.S. than there are renters, or is it vice versa?
I
Do
have
we
no
ha-
idea. I would assume
we
there's
probably
more
have more
renters than
renters, right?
homeowners.
We probably have more renters.
Yeah,
Yeah.
yeah.
All right. So there you go. All right. If if someone goes to apply for a home, let's say this home is 200K, but they got approved for 400. What happens to that other 200? Does that help in closing costs? Can they use that to other 200K towards closing costs? Does it get applied to maybe a credit where it sits in their account? Or is it just, hey, you got approved for 400K, the house is 400K, or I'm sorry, the house is 200K, here's 200K. This other 200 you're not using. How's that
Right. The
work?
lending, the
Can they
loan
pocket
is going to
that?
be based off of the lower of the contract price or the appraisal. Okay.
Appraisal, gotcha.
So if you're pre-approved for 400 and you're buying a house for 200, that loan is going to be based off of a $200,000 purchase price.
Gotcha. Okay. In your opinion, is this an ideal time for someone to say, you know what, a first-time home buyer, I want to purchase a home in Tampa, or let's just say in Florida? Is this a good time for them to buy?
Personally, I think it's never a bad time to buy real estate. There's only a bad time to sell, right?
Okay, explain that.
So,
Speak on that. Yeah.
so with rent, you're not getting any of that back. Okay. When you buy a
Yeah.
home, like you're not getting none of that back. When you buy a home, even if um, like a 6% interest rate is lower than 100% of rent. You know what I'm saying?
100%. Yes.
And then the other thing would be like, well, what if home values dip? So before these last 2 years, like the idea of buying real estate was not I'm buying a house because I can gain 40,000 in equity in 3 months.
It is
We're
now.
like,
That's the mindset. Yeah.
right, but that's like an anomaly, you know what I mean? Like,
Right.
oh my gosh, I have a 5% rate. It's so high. And it's like, that's not a high rate. We've just lived these past 2 years, and it's like we forget the 2 years before this. So these past years we've lived in have been COVID, totally unprecedented times.
Yes.
Rates at
Yeah.
2% are not healthy for the economy. You know what I
Yes.
mean? Like
Yes.
when that was happening, I remember reading a bunch of articles like, if this keeps up, like our economy is literally going to crumble. So like this inflation, this getting back to normal, like this is good and healthy for the economy. A rate of 5% is great. If you look at rates over the history, like they've never been this low. Like
Right.
we just got rates just went past the highest they've been since 2009. But before that, rates have always been higher. Like a rate of 5% is really like still good. It's way better than renting. And on top of that, so to kind of go back to my other thing about the equity in the homes, I think normal appreciation in Tampa before COVID, depending on the area you're in, was about 3%. And then like South Tampa was like 6%. I just saw someone post a
Mhm.
chart the other day about the trends of appreciation values for homes. And I don't know if it was for Tampa, if it was for Florida or for the whole country, but like I think for 2023, it said that appreciation was still going to be like 9%. But then after that, it peeled off to where you're still at 3%, 3%, and 6%. So really the only reason you would think, wow, now's not a bad time is if you think the economy is actually going to tank. And there's really no signs of that. Back
An
in
indication of that.
2009,
Yeah. Yeah. Sure.
yeah, when back in 2009, when the market crashed, they were these loans were like based off of nothing. The
Hmm.
appraisals were totally inflated. Like nowadays, you look at what's happening with appraisals. Appraisals are coming in undervalue, and people are having to put cash into these homes. Like it's it's totally different than what happened before. It's still a
Yeah.
good time to buy real estate. It's just like crypto. You know what I'm saying? You can buy
Just get in.
crypto,
Yeah.
but tomorrow you're going to lose like 10,000. So you just don't sell tomorrow. You know what I'm saying?
Right.
You wait till it
Right.
comes back up. You know what I mean? So it's like not a bad time to buy. It's only a bad time to sell.
That's a talk for another time for sure.
I don't do anything with crypto. I just heard
Crypto.
someone, I had a client tell me about their crypto account. And I was like, that sounds crazy, but it's like
Yeah.
a very like micro, like real estate's macro. Like you got to be looking at it. Like
Yeah.
I'm
Long
going to be
term.
in this
Yeah. You're
home.
looking at for long
I'm
term.
going to be in this home for the next, 2 years at minimum. You know what I
Minimum.
mean?
Yep. Yep. So let's speak a little bit more on that. Let's speak to that renter that is on the fence really about, what, I'm so used to renting. I know prices are going up, but I don't have knowledge or an understanding to say I want to purchase a home. So because they do what they're so used to, they're accustomed to renting, so they're going to stay renting even though prices are going up, not understanding, hey, look, it's what you just said. 100% of what you rent is 100%. You don't get any of that back. So speak to that individual that is still on the fence, but you know, just doesn't really know if they should or shouldn't.
Um, you gotta pay to live. Like, you know what I'm saying? You gotta pay to live one way or another. Do you want to get some of your money back, or do you want to get none of it back? You know,
I
that's the way I would
love
think
it,
about it.
man.
Like,
Yeah,
I gotta pay to live somewhere. Well, what? I mean, either way, you're paying to live somewhere.
yeah,
Like,
you're paying to live. Yeah,
what if I lose value in the home?
yeah,
You still paying to live somewhere. You know what I
still
mean? Like,
paying to
what's your
live.
only
Yeah,
other option? Move back in with mom and dad. You know what I mean? Like,
yeah,
you're gonna have to pay to live somewhere. What if I lose my job? What if you lose your job when you're renting? Like, what do you like? It doesn't matter. Like, either way,
yeah.
you got to pay to live somewhere.
Yeah. Well, I feel like people always like when they want to take the first step or that next step into something that's unknown, right? The dark, or yeah, the muddy waters, if you will. Um, they always put barriers in front of them that aren't necessarily even there, right? They create things to kind of make up for, well, I can't do it because X, Y, and Z. It's like that doesn't matter. That's not stopping you. But they create that in their heads so that this is a reason why I never did it. So I try to help people eliminate that, you're creating your own barriers. Those necessarily don't exist. But so now let's speak to the investor, the first time investor, right? Fresh out the military, now a veteran. They want to use the VA home loan, or in fact, they don't even want to use the VA loan because they already purchased a home. But they're looking to become an investor. What's your dialogue with the first time investor? If you've had that, have you had that experience?
Yeah, all the time everyone wants to buy their first investment property. Um, I mean, it's pretty straightforward. Minimum of 15% down,
Mm,
um, and that's honestly pretty much it. You know what I mean? Like, it's
that's
the
pretty
same as
much
buying
it.
your primary residence. You know?
Wow, wow, straightforward. That's simple.
Yeah.
Okay. Okay. Now, you may know this, but do you have a knowledge on what a first time investor should be looking at? I mean, from your perspective, as the loan officer, hey, this is what I've seen first time investors purchase typically, you know.
Everybody's different, bro. It depends on your flavor. You know what I'm saying? Like, it just depends on what you want. Like, I really don't ever get involved in that conversation. That's more of like the real estate agent that's guiding them in that sense.
Gotcha.
Um,
Kind of
Out
stay
of
in your
all the
lane.
investment loans that I do, I don't think I've ever gotten into that conversation with them. Like,
Wow.
I would almost be asking you that. You know what I'm saying? Like, where
Yeah,
would you
yeah,
guide
yeah.
people
There you
to?
go. Yeah, yeah, and I
Yeah.
got an answer for it, But no, no, that's good because I'm always interested in to seeing if people are interested in like, hey, let me peek over and see, what's going on or how they do things because we're essentially all in the same industry. So I know sometimes it piques my interest to know how Doug is doing a certain thing. Like, okay, well, Doug was he's doing this in this certain way, and this other company may be doing it but this another way, but you do it this particular way that just works for my type of client. So that
It just
that
depends
that's
on
why
what
I
they're
asked that
doing.
question. Yeah.
If they're looking to flip property, like
Mhm.
looking to only hold it for a few months, then they need like hard money, like a hard money lender, which essentially they're paying up front for the money just to hold it, and they got to refinance into like a long term loan. All the loans that I do are long term loans, so
Long term, what's long
um,
term?
they're looking to buy that home and hold it and keep it, and like
Okay.
use it as a rental, use it for
how
rental
many how
income
many
stream.
years, give or take? Doesn't matter.
At least one, as long
Oh,
as they're
one
holding it
year.
for at
Okay.
least a year. Yeah, but I also try to like stay in my lane. Like, even when I'm talking to a
Gotcha.
buyer about like making their offer, I might give them recommendations on what I think, but I typically defer to like the real estate agent that they're working with. Like, hey,
Appreciate that, man.
Like, here's what I think, but like, I'm not a licensed real estate agent. So, and when you tell your real estate agent, they might want to shoot me for this one. So just like, lob this one out there with care. But,
Yeah.
when my friends are looking to invest, I give them my 2 cents. Have you thought about this? Have you thought about that? But they're, again, I'm not an expert in it. So I'm an
Gotcha.
expert in getting the loan and getting that to close for them.
Right. And that's what we're here doing, man. SME, SME. All right. So yeah, no, that was good, man. I appreciated that. So someone that is looking to become, and you know what? Actually, I want to get this clear. Is it loan officer or do you prefer lender? Um, which do you, or are they even different?
Yeah. So a loan officer is one that originates the loan. So like I have my MLO, my mortgage loan originator license. I originate the loan, but I also own my own brokerage. So I'm a broker owner and I'm a loan originator.
Gotcha. So you're the whole package.
Yeah.
Okay, got it, man. That's good. That's good. So someone coming or wants to get into the industry, we have you know, your story of, you started in the front desk, and then worked your way up. Does someone have to go about doing it that way? Do you recommend that way? Or is there, a direct way that they can go to school, take a course? What do you recommend for someone wanting to get in right now?
I have a buddy that just got his loan officer license and became a loan officer right away, just started doing loans. You
Sweet.
can do it right away. You know what I mean? There's just a lot to it. And for like me, I was much more comfortable learning my product before like I don't know, I'm kind of weird. I like control. I like to know what's going on, but some people can just get their loan officer license and say, "Hey, I'll do your loan for you," and then kind of just figure it out, as they go.
Yeah,
But
and
yeah,
that's
if you're
big. Go ahead, go ahead.
I was gonna say if you
So
want to get your loan officer license, you want to start like, and you're like, I can just do it, then that's one way. The other way would be to like learn it through being like a loan partner.
mhm.
In which case, you work under a loan officer,
Yeah, you
right? And you
shadow
get to kind
someone,
of
if
like,
you will.
yeah, like mentor under them.
Mhm.
You make a salary, so it's not like you're making loan officer commission. So some folks don't want to have to go through that process. They just want to, boom, I
Gotcha.
want to be a loan officer right away. You know what I mean?
So, someone gets started and, now they're a loan officer. What would be the best way to market yourself? You know, um, are you doing networking events? Right? Are you doing ads? What is the best way to market yourself as a first time guy coming into the industry or girl?
Yeah. Yeah, just getting to know people, just getting your name out there, just trying to meet people, build relationships. And then when you get deals going, doing a really, really, really good job on that deal to solidify that relationship. You know what I mean?
Now, are you on Google? Are you on did you create a Facebook page, an Instagram page, and are you active on them? Like, is that a
I,
thing, or
I just created a business page recently. I've
after
always had my
after X
personal
amount of
page.
years?
What's up?
After about 4 or 5 years, you doing
Yeah.
it on your own. Yeah.
I think you get a lot more interaction on your personal page personally. Like a lot
Yep.
more people just want to interact with you personally. And then like, just throw in there what you do. I mean, it's kind of like, I guess it's like a job that what we have, but it's just kind of like life. You know what I'm saying? Like,
So your life
you
in
just put
it.
that out there on social media.
Yeah. 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 Awesome. If there was a checklist that you would give someone, you know, this is where I got started. This is where I am now. What would be the quickest way to get there from where you started to where you are now? Well, if you can put, let's say, 5 things on that list, what would you put on that list? 5 things that people would need to do to get from where you started to where you are now.
Um,
3 to 5.
yeah, it's hard to do five. I'll just pick a few numbers and we'll see how many
Yeah,
numbers I
yeah,
end up with.
yeah.
But
However you get there, yeah.
they need to learn loans. They need to get their loan officer license and they need to start building relationships.
Nice. Yeah.
Yeah.
which which of the four would you say is probably the most important? Like, which one would you put at the top?
Me personally, I think knowing your product is the most important because
Boom.
me
There you
personally,
go.
I don't want to mess up a deal
Yep.
because if you mess up a deal, you mess up a relationship. You know what I mean? Like I personally do not want to mess up a deal. So knowing 100% when I send out that pre-approval letter, they can get that loan is the of the utmost vital importance to me.
Yeah, 100%, 100%. And you know what? That's a segue to your most recent email or notification about the rate, right? So you just sent an email out this week about rates, and the one thing that just like headline to me was how to compete with cash offers. So talk a little bit about that, and I'll actually put the photo here um, on how you're marketing that. You know, having people that are looking to buy a home, but they're having that difficult time against cash buyers.
Yeah, so it's almost like an insurance policy for your offer, right? To a seller, you're saying, "Hey, look, we're getting financing for this, but if the financing falls through for any reasons, um, we've got a cash investor who's going to buy this cash, right?" So essentially, it's going to cost 1% of the purchase price to do that, and then if the financing falls through, then it's going to cost 2.75 of the purchase price. So there is a
Mm-hmm.
cost that comes behind that, but it's a cash offer at that point with essentially no appraisal gap, just depending on the scenario. But it's the way that you can compete. It's how you compete with cash offers, and it just costs you 1%.
1%. Now, is that available to anyone that comes to you with a 580 and up, or how's that work
Yeah.
out?
So they get our pre-approval letter to know that the client's pre-approved, and then they'll do their own kind of like desktop appraisal to give that specific home the value that they're going to guarantee a cash offer up to, right? And then yes, if the lender, like if I say I'm going to do the loan, I'm going to do the loan.
Okay, so you have the backing of that cash of that investor
Yeah.
because it's your word to the investor saying, hey, this person's good to go. That
Yeah.
insurance.
Because
That's
either
awesome,
way,
man. That's good.
they're gonna make their money. You know what I mean?
Mm-hmm.
So like if the deal falls through, they're gonna make one, or if it doesn't fall through, they're still gonna make 1% just to be in place there. And if it does fall through, they're gonna make close to 3%, you know, then they're gonna buy that property, but then they're gonna sell that
Buy that
property.
property.
They're gonna hold
Exactly.
it. I think it's like, yeah, exactly. It's like for them, it's like, nothing
I
in life
win
is free.
anyways. Yeah, I win anyways.
Right,
Yeah,
exactly.
see, and not that we're interviewing me or you're asking me this question, but for me, as a realtor, it's like I look at it like that's where I'm not downplaying what I do as a profession, but I do know that we chase a ticket, right? You're chasing that dollar sign, looking to market yourself. And um, I will say, in my opinion, um, the best way to get more clients, to get more referrals, it's not about constantly looking for people. That's not my philosophy. My philosophy isn't to go look for people. My philosophy is if I want more sales, if I want more referrals, if I want happier clients, it's about working on myself, right? It's about even marketing myself, putting myself out there. So I like the fact that you said knowing your product because that goes into the same idea, right? But uh, for me, it's like as a realtor, you're chasing that next close, that next seller, that next buyer, that next investor, to some degree, right? But as an investor, it's like it's you're on your own. You have your X amount of dollars that you want to spend, that you want to invest, and then you go out there. And if you're doing like an Airbnb style, or if you're renting the place out, it's that residual income that's coming in. I mean, with Airbnb, it's a little different, right? Because there's more maintenance, if you will, because you're dealing with more traffic, right? But it's still that residual there. Versus as a realtor, it's that paycheck to paycheck to paycheck to
Right.
paycheck. So, but nonetheless, I enjoy it. I really do like it because I'm a people's person. And as a realtor, I got into this because it allows me to put people where they're comfortable, right? And, put them where they need to live. I mean, we all need to live somewhere, right? So it gives me that opportunity to be somewhat of an advisor to people. It's, from start to finish, and I enjoy that process.
Yeah, super
So
cool.
I will ask now, what are you doing significant that you feel sets you apart or has set you apart? Because I personally do think you've set your apart. You set yourself apart from other loan officers, not just by creating or starting your own business, but being, that one deal package and then offering things like how you just mentioned, you have that investor that will come in and put that money down if you want to compete with the cash offer. Aside from that, what do you feel like this is where I'm putting my mark? This is Smith Lending.
Yeah, man, it's just that experience. It's just the feeling of it's just the client satisfaction, right? It's the way that I do my communication with my clients. It's the way that I do my weekly updates with them. It's the way that
Mhm.
they always know what's going on. When we hit a milestone, they get an email that has a video explaining what's happening, like a ton of communication where, they're never worried about what's going on. It's that feeling, man. I don't know how to describe that feeling.
Yeah.
And then as well, with my brokerage, just kind of go super deep. I think you were mentioning this before the call, but like you were asking about different lenders and how who has different rates. Every
Hmm.
lender sets, this is like super deep, but like every lender sets their margins, which affects their rates. And my margins
Gotcha.
are set super low. I only know like one other guy in Tampa who does the same thing as me, maybe two other guys in Tampa.
Does that
But
hurt
like,
you? Or
well,
does that
I
help
make
you?
less money than like veterans. The other company that you mentioned, like
Yeah.
theirs are super high. They make a ton of money off of veterans, and it's because
Good to
it's in
know.
their interest rate. So they're
Right.
charging more essentially to do the loans. But same with like Quicken, or like these big companies. If you
Yeah. Yeah.
see
Yeah.
if someone's in the commercial for the Super Bowl, how you think they got there? You know what I
I
mean?
didn't think
Like
you got that. Yeah.
it's these companies have marketing budgets built into it. I don't have a marketing budget. My marketing is relationships. And that's what
Right.
I tell every single client. When I talk to a client, I'm like, hey, listen, you're going to get me from start to finish. It's a way different process than anybody else. I'm available Sunday through Monday from 6 a.m. to 9 p.m. So my phone goes on do not disturb. My margins are set lower, so your rate's going to be really great. I don't pay for any marketing, and that gets passed to you. The only thing is that I'm going to ask you for a referral by the end of this process. So as long as
Nice.
you're comfortable with me asking for a referral, you're going to get a really, really great deal. And that's
Wow.
how I build
That's
trust and
awesome.
build relationships. And I started doing it a while ago. It's worked. It keeps working. So I'm just going to keep offering great deals for loans. I make a little bit less on every deal, but it's worth it to solidify a relationship to me. I'd rather do this loan and the next loan than just do this loan and you're not totally happy. You know what I mean?
Right. Yeah. No. 100%. And you know what? That actually helps you out in the long run because you have repeat business. You'll have
Right.
that repeat business, and then once again, you'll get that referral. People just walking into the office. Doug, I heard about you. Can you help me out?
Right.
So no, that's great, man. You know what? I think. Well, we'll set it off like this. This is it's probably the last question, but what question do you feel you wish I would have asked you throughout this process or throughout this interview or this talk really? What question do you feel like, this is a question that I've been wanting to answer, or this is a question that someone else has asked me and that, I've answered it, but now I want to answer it in a bigger scale, in a sense. I want more ears on this.
Um, Probably the question you asked is now a good time to buy? I think that's a highly debated topic, and I think that real estate is a good long-term investment. I think that more people should consider it. Um,
Speak
I
into the
do.
mic. Speak into the mic. No,
Oh
that's a
yeah,
joke.
yeah,
I'm
yeah,
saying
yeah.
like
Yeah.
amplify that. Yeah, amplify
Right.
that, man, for
I
sure.
don't know
Yeah.
why someone would rent. The only reason why I know someone would rent would be if they need to do that at this time in life to put themselves in a position to buy a house.
Yeah.
You know what I mean? Like if maybe they were a W-2 employee that was a salary and then they just went commission and they just can't buy right now. Or if a life event happened and they don't have enough saved for the down payment right now, or there's life that happens. There's a time, but like you have to live somewhere. And within a year, I feel like anybody could buy a house. Like there's a way to get it done. Just look at it. It's a smart choice. It's building a future for you and for your family if you have one. You know what I mean? Like you got to rent or you got to buy. Buying makes more sense.
Buying makes more sense. Oof. That'll be the tagline right there. Buying makes more sense. No, I like it, man. That's great. So, Doug, man, I appreciate you. Thank you. I hope that the questions that I asked made sense to you and will give value to anyone that's watching this, whether it's a year from now, whether it's a month from now, that it makes sense to the viewer. So if you could let us know where people can find you, social media, website, you name it, and let us know what else you have going on in the near future.
On Facebook, you can find me, I guess, by searching my name, Douglas Smith, but also my company, Smith Lending, is on Facebook. I think on Facebook, it's facebook.com/the_Douglas_Smith. Instagram is instagram.com/the_Douglas_Smith.
I'll make sure that I write it here somewhere.
And then I'm on YouTube as well. I don't have my own YouTube like URL yet because I need 100 subscribers, but find me on YouTube, Smith Lending, Douglas
We'll get
Smith,
you on there.
and subscribe would be super cool because I'm trying to hit 100 subscribers so I can get my URL.
Awesome. There you go. My man, Doug, man, I appreciate you once again. And thanks for joining us at S.M.E Talks. We're signing out.
Awesome. Thanks, bro.
Thanks, man.